Let's get started. So, I wanted to start with Tesla today because this has been one of the bigger positions that I've been rotating in over the last couple of weeks. And I think that our opportunity here is quite good. I really think that even with the downside we're seeing right now, I have a very strong supposition that we gonna be just fine. But at the end of the day, it's one of those things where it's not the end of the world because we have our tried and true support down here that should that break to zoom out to give you an idea. So should this support get violated, then we exit the trade quite simply. And that would be about 2015. My goal is to add down to, as I've posted in the trade specifics, that my goal is to add the kind of final bucks in the position if we can see 140, 145, which is possible, right? Which would keep my average at about 150 all said and done, which means then our losses would be quite minimal and we would be buying off long-term support, which is always a very good thing. But I do think that right now it makes sense to buy down on this depreciation we've seen in the market as far as Tesla has been concerned. You can see this little earnings bubble down here. Let me make this a little bigger for y'all. You see this little earnings bubble down here. You see that, obviously earning expectations were higher, beat, loss. And then what we're waiting on right now are the April 23? So end of this month. We should have a pretty good understanding of exactly what we're going to expect with Tesla going forward. I'm assuming that with price cuts, their sales numbers should be okay. We can go through and look at what the NASDAQ's projections are, because obviously it's an important number to look at, and look at what the experts are thinking, because I think usually with some of them, they're pretty good at predicting how the revenue is going to read out. And again, it's going to all come down to Tesla's ability to set forward guidance in an appropriate way that is going to really just embolden investor confidence, because without that, then we really don't have much to talk about. You have to see that in any situation where somebody is following closely on an earnings announcement. If you don't have that consumer confidence, then you're not going to get the price action to really substantiate a nice move to the upside without it. So I think that for us right here, we really need to see some positivity in that earnings announcement, more so on forward guidance of where we're going to go from here. We want to hear strength in that message and narrative from Elon, because if we can see that, then we're going to be in a pretty good position. Let's take a look here. All right. All right, so we got people across the board, some joining us from Discord, some joining us on YouTube. If you are on Discord, I'll ask that you please mute, my friends. So, okay. I think that right now our focus is obviously on those earnings announcements. Let's talk about the chart, right? So we have all of our levels plotted out. We've already got that. These very dark lines are the most important ones, because those very dark lines are our most, I would say, highest degree of confidence range, meaning we are extremely confident that should Tesla break above 203, it has a lot of data to support the idea that it's going to go to 267. And that's, I think, an indisputable fact. I'm just kidding. It's never a fact. But the analysis tells us that it is so. And if you look at the Tesla chart, you can see that it's happened once, twice, 3 times downside, 4, 5, 6 times, right, since 2021. So with a high degree of confidence, we can assume that Tesla reaches that demand, breaks that demand, it overwhelms supply, and it pushes to 260 plus, right? Especially after having such a rough year from January to now. I mean, we're down, what is that? We're down $100 a share. So pretty substantial, right? I would argue overcorrection. But what I do like here is that we are consolidating a little bit. We're finding a little stability at the 160 range. And now we need for that to hold. or this is going to be a different trade in which we're going to build down the position to one of the 140s. But again, that's a long-term perspective. That's something that we're not looking to make money tomorrow. We're looking to make money over time. And I think that this is a very good one to look at. And I think it's an interesting business that we need to all understand is a software play more than anything else. But they've also broken into an automotive industry that is very difficult to break into. No one else is going to gain the market positioning they have. No one else is going to have the branding they have. No one else is going to have the notoriety and the platform that Elon has. It's just not going to happen. So I think that this is one that, short of some significant manipulation in the market or some really bad decisions on their part, I don't see this going anywhere anytime soon. I just don't. It's getting a little hot in here. I need to go and pop this off. Too hot. Too hot. So our opportunity is here. So we started the position around 160, which is right about where we're trading right now, 164 and change. And we have been building into it on the little retracements down, which is obviously always a good technique for those of you that enjoy a nice dollar cost average. I think looking at this price action in a smaller time frame really paints a picture for you. So we struggled at 180. We held support at 160, but we have to hold at 160. We cannot dip below that. But we do have a bit of convergence in the RSI, right? RSI came down really as low as 21 here, but we're only seeing RSI down to about 31 right here. So I think it's very interesting to take into consideration the fact that this is traded in this range in a consolidated fashion. We have strength above 182 to go to 200. So in my opinion, this is probably one of the best opportunities we're going to have on this one specifically to trade these ranges in an efficient manner and make some good money in the short term and the long term. And I also believe that once this thing really takes off and the market can really, build confidence in the long-term mission of Tesla and take off, I don't think we're going to see the low 100s again, obviously short of significant changes. These nuts said Tesla's not done getting slaughtered. Again, I agree to a degree, and I think that there is definitely opportunity for downside here, and that's not something that we want to take lightly. But I also think that we have some pretty stable price action and price points to understand and really dive in on to really capture the right position at the right time. And I think right now we're nearing that perfect opportunity for a buy down position on a good company that isn't valued appropriately. So again, I'm willing to buy this down to 140 a share. And I'm not saying that's not possible because, again, no one predicts the future. I do and still think that it's very possible that we hit that. Very, very, very possible. So keep that in mind. So another thing I want to do while we're here is I do want to dive in on the credit spreads today and figure out exactly how we continue this streak of profitability. NVIDIA was locked in and created I don't know how many weeks at this point. I know it's a lot though. And that's all I care about is that it's a lot in a row. Tons. I think Meta is actually where we're going to look. So let's take a little peeksky poo here. There's tons of strength. This is just like psychotic that we're even trading at 525 from a low 95. Shout out to Mr. Stock Luck Profits here jumping in on this at like $100. I mean, he's up 400% plus on this trade. Still blows my mind how well that went. So I think that I don't want to say that Meta's going to keep going, but it's hard to see the value for me, but it's also hard to argue with the upside from here. And that's really the struggle that I'm having is like, okay, it's here, it's real, it exists, but come on, man. This is just insane at this point. Absolutely insane. I think that right now we need to be very, let me put this, let me put the ticker up there so everyone can see that. In perfect timing, our special guest has arrived. Mr. Handsome himself. There he is. Look at him sitting there in the back room waiting. Locked and loaded. And then he gets disconnected. Oh, boy. Anyway, I want to get him on here to talk meta value because, like, if there's anyone that I really think has a lot to say on it is my man Shy. Let me try this one more time to get him in here. What are your guys' thoughts? Meta, does it keep going? Does it stay? Is anybody here holding a position in Meta right now and really, really liking it? There we go. Hello, hello, hello.
What's up, everyone? Can you hear me, Oz?
Yes, I can.
What's up? What's up? I hear you guys talking some meta.
Where that's exact perfect timing for you to pop in. So what do you think? I mean,
Uh,
this chart is we're not living on planet Earth.
I mean, we're only 1 week into Q2, but clearly Meta is the leader among Mag 7 names. I do think an election year is playing a significant factor into why Meta is one of the leaders. Similar fashion, Trade Desk has been one of the strongest growth tech companies where if growth is pulling back 20%, Trade Desk is maybe 10%. So I do think the theme of ad tech is playing strong on an election year, especially this year where, I mean, to be honest, it's a 50-50 chance who's going to win. It is leaning towards one direction, but who knows? I mean, it's a total toss up. There's even like commentary of like there's a third party that might come in, or Biden or Trump might not even be the winners, and the election's like in 7 months. So like I think it's gonna be a wild election year, and I really do think the ad spending is gonna be bonkers. And because of that, Meta and Trade Desk will be the winners within that specific thematic.
Mm. So let me put one in front of you then. I just had a very interesting call with them actually to discuss what the hell is the Reddit ticker, RDDT. I just had a very interesting call with Reddit discussing their recent release of their ad tech platform. And you know what it looks very similar to, but I think has a significant edge in terms of viewership. So I found some very interesting. I found a few stats very interesting when I talked to Reddit. They told me that their user base is the most exclusive of any user base, meaning you are not going to find nearly as much crossover from Reddit users to additional platform versus, say, Meta, Instagram. It's almost like an 85% overlap, right? So you're targeting the same people in the same place. Reddit only shares 34% of their audience with Facebook, which is the biggest platform, right? So that's a very interesting little arbitrage there of like, okay, so what you're saying is you guys have access to people that others don't.
So that's interesting. So Reddit's really interesting because if you go on based on fundamentals, nowhere close to value right now. It should be down 40%.
Right.
However, if you're talking about which platform owns first user data, Reddit is the top of the crop for that. And especially in the realm of like the AI revolution, all the training data you need to build these LLMs right now in their stage of it, like that's so fucking valuable. That's what Reddit has. And do you think like it's not an AI play, but I do think at the moment in the near term, like their data set they own for like all their users that don't go anywhere else is just on their platform. That's their biggest competitive advantage. And they haven't really done anything in that yet, but that's on my radar for like the next year. Like, what are they going to do? Because maybe that's like the picks and shovels play on data training data for all these LLMs. Because my opinion, OpenAI will not be worth a shit ton of money. I think LLMs are going to be a commodity. The real asset is the data. So that's why I love Snowflake because they essentially a third of the Fortune 500, all their data is on Snowflake's warehouse, and because of that, they can create these insane AI features with their new CEO, like how to use this data and make it simplified for clients.
Right.
And Reddit, again, they have like the gold standard of data that nobody else really has access to, and that's going to be super valuable for all these LLMs.
Yeah, I'm gonna try to find this screenshot. Actually, I took it. I don't know if I was supposed to, but oh well. I found a few things pretty interesting. So, okay, so on Reddit, the median household income is 115,000, which, in my opinion, seems higher than what you're going to find anywhere else. So they also have a very even split in terms of like gender demographic breakdown at 55% male, 45% female. That shocked me. I would have not assumed that as many women use Reddit as they do to
You know why I'm not surprised? It's because they're
women research, dude.
Exact Q&A question there. All the Q&As and questions, like they go on Reddit to get the answers of the real solution. Women love just like looking, like going those deep dives and just like those black holes or just finding information of random stuff. Reddit is the gold standard for that. So that makes sense. That's so shocked.
It does. And another one I found interesting because she drew the parallel to Discord because that was kind of this one of the focal points of our conversation in telling her what I do and where our community is, and because she kept saying community, and I was like, I like that because it's been kind of the focal point of what we've done in building our audience on Discord, right? That 85% of Reddit users do not use Discord.
That's shocking to me.
That shocked me too. But that's a growth opportunity. She was basically making the argument that, like, look, 85 or wait, that is so wrong. It's the absolute opposite. 85% of Reddit users are on Discord. Excuse
that makes
me.
sense. It's they're siblings in my head, so like that makes sense. Yeah.
Yes, and it was that's what blew my mind was that Facebook was at the tail end of that list. So what I was wondering about, what kind of scratched that little spot in the back of my brain is Facebook's audience, right? So with our nonprofit stuff we've got, I don't know, 150,000 followers on Facebook. We post a lot there. Our audience is primarily women 30 to 50, right? That's like 70% of our audience that care about that stuff. On the data that the Reddit lady shared with me, 48% of their audience is 18 to 34 females. But it's super interesting because, again, that's the same demographic that we touch a lot on Facebook. But then seeing that only a fraction of those Reddit users are on Facebook, it's basically saying we have this massive untapped market of the best buyers of consumer products in the United States. Because who buys more consumer products than anyone else? Women, 25, maybe 25 or 30 to 50.
That's a good point.
They're purchasing for the household, they're purchasing for the kids, they're purchasing for themselves. Like, that's why Target numbers have been so great. Who shops at Target? Middle class and wealthier women, ages 30 to 50.
Wait, all right, so I'm going to give you a scenario right now. Let me look it up, the information real quick.
Okay.
Before I ask you. Oh, shit, it doesn't work. So what's interesting, because, wow, this is actually kind of crazy. First off, for Reddit, I think it's going to be a very ugly 1 to 2 quarters, the next couple earnings, just because whenever someone goes IPO, they really don't factor the fundamentals as much until the first quarter or two. And I don't think it's profitable at all. If it is, it's minimal and the growth isn't that great. So I do think it gets start re-rated. However, I do think, like you said, the women angle, the e-commerce angle is what's even attractive. And there's Pinterest and Etsy are just totally going nowhere for years.
Right.
And I do think, wow, so having some kind of e-commerce partnership or angle with Reddit, where Reddit's is worth the same amount as Etsy, for example. So classic, wow. All right, so both stocks don't really go anywhere. That's an interesting merger. Or Pinterest acquires Reddit, which I don't think will happen because, as we all know, there's one IPO. But Pinterest is worth 25 bill. Reddit's going to be worth 7 bill. I think once it consolidates after a year or two, it's probably going to be around similar valuation, 5 or 6.
Mm-hmm.
That's an interesting of like, wow, Pinterest now owns a shit ton of data. They have direct access to a lot of females.
Mm-hmm.
Synergy is very interesting. So that's an interesting dynamic that I was like, do you think can you see Pinterest acquiring Reddit down the line, like 2026?
Weirdly, yes. Like, it seems like a dead platform, but it's not. Pinterest is sneaky. Pinterest is very sneaky. I did not know the amount of consumer product sales occur as a result of Pinterest. I just didn't know that. But like, when you think about it contextually, right? Say me and my wife buy a house, right? And she's looking, I really want to redecorate this room. I just don't know any ideas. I don't know what to do. Boom, Pinterest board, affiliate link. Here's the color. It's bare paint. Here's the tag. You know what I'm saying?
Well, here's what I'm thinking. Like, Pinterest is the first layer. Second layer, I'm gonna go on Reddit to get even more information on.
Oh, so you got visual and text.
Boom.
You don't want to turn Reddit into a visual platform.
Exactly.
Because then it feels spammy and ad centric. And that was one thing I asked her. I was like, I think the reason people trust it so much is because it is so much just block text and user submitted and suggested information.
Mm-hmm. I think it's like an end-to-end almost.
Yeah, but that also then that I feel like that brings, you can't cuck the Zuck, man. Which that would be so wrong. There's no way, like with the current antitrust law, there's no way they could allow a company like Meta to buy. That would be so jacked up, dude. But
I
could
mean,
it happen? Absolutely.
after Microsoft's acquisition going through, I do think it's like, oh shit, I didn't think that'd go through, and that did.
Yeah,
Who
it's
knows? Like
scary.
maybe they'll pitch it, but I don't know, I think I'm still convinced that Meta's next big purchase will be Unity, the stock.
Oh
So go full all in on the gaming and that element. But have you talked about Google and HubSpot? Yeah.
no, I have not, but I'm very interested.
So Google, this isn't first off, if you guys haven't heard, yesterday rumors started swirling that Google hired advisors to potentially acquire HubSpot. And HubSpot's been on my watch list for 2 years. It's one of the best of breed software names, or like what they specifically do for inbound marketing and the CRM. Like they're the cream of the crop, like incredible. Because of that, they've rarely dipped. Like I don't think they've ever tested their 200 day since like I don't know the COVID crash. Maybe like it's like one of the strongest stocks out there.
Wow.
Um, and Google is interesting because they're worth 35 bill HubSpot, so it's probably going to take I don't know 45, closer to $50 billion to acquire them. That's a massive purchase, especially in a time where Gemini, which is their AI product, is clearly last in line between the competition. So, is this a smokescreen to kind of distract shareholders? Like, as until we catch up on the AI, we're going to go really hard on the CRM product within Google Suites, and we're going to obtain an amazing software company because we have $115 billion of cash sitting doing nothing. We're going to use that cash to acquire this best of breed software. And then you guys focus on this while we try to catch up in the AI race. That could be the reason why they did that. Or I don't know. I mean, first off, HubSpot, it's like trading 120 times free cash flow this year. So it's like nosebleed valuation. So that's the reason I think there's another political angle within the org on why they're doing that now, because it is stupid valuation. HubSpot. In addition to that, you want to acquire at a 25 to 30% premium. Like that's a hefty price, especially within like there's a ton of competition within HubSpot's space. Like there's Salesforce for one, Adobe is another, and the small players like Klaviyo, which has an amazing partnership with Shopify, and then Freshworks. So I think it's like a highly competitive space, an amazing software company, but stupid valuation. Is this a smokescreen for them fucking up AI and they just want to please shareholders of like get this best of breed software name? Who knows?
Yeah. I mean, you can't build it, buy it.
Yeah.
And that's kind of been the mantra. I feel like that's the scariest part to me about it's either going to be the advent of a new age in which like someone who's no one from nowhere can build a software product that scales to 100 million, or it's the end of like small scale development as a whole. It's kind of the end times, if you will. And that's what scares me with everything, just constantly. It's like you just keep piling it up more towards the middle. You know what I mean? And the more you build that base, it's like the wider the base, the higher the point of freedom, but not for everyone, for the one. And that's the problem. And guys, that's what you need to always keep in mind when looking at different names in the market is like, what's going to give me the best opportunity to capitalize on, however shady it is, what they're doing in the market, because you don't want to get left behind. And that's why understanding these narratives and these ideas and concepts and how they all tie together is something you have to understand, because at the end of the day, the buy and hold index strategy is dead. Good luck. Not going to happen again. Maybe with some of the new and more innovative ETFs, maybe. But even then, still a stock picker's game, because you got to pick and choose. It's not just like throw it in the queues. It'll be fine. Buy some Vanguard wide mode. Like it's just not how it's going to be. And I think looking at explosive growth, like, obviously NVIDIA, which we don't need to talk too much about because I'm damn near sick of it. But
do you want to talk some explosive growth? I have an amazing growth story combined with an amazing chart, and approved it this week. Look up ticker TMDX. This is my baby, my mini monster. I love this stock.
Transmedics.
So this is an app. Like, if you guys know, like I found Celsius, my average cost basis in Celsius is like mid-teens. This is like my next Celsius. I think this is going to be an absolute monster. They have a huge moat and competitive advantage on what they do in organ transplant. And it's not even close. Like they own the whole end-to-end network, massive network effect moats. And it's only worth less than $2 billion maybe. And I fully think this is going to be a $10 billion company. They just bounced on their 200-day moving average multiple times the past week. And as you guys saw the past 3 days, like analyst updates, it's been range like it went up 15% past 3 days, and not just all at once. It's been consistent 5 to 6% every single day. It is an absolute monster. This thing wants to be higher. I do think I did see, like, I think Jonah Lupton mentioned this on Twitter, and it's an interesting angle where Shockwave, ticker SWAV, they just got acquired by J&J today officially.
Wait,
I
what was
do
that
think
again? S what?
SWAV. So they got they're similar med tech company, different realm of the industry, but
Wow.
it's similar fundamental profile of Shockwave a couple years ago. So that's why a lot of people are correlating Shockwave and Transmedics right now, because they're like one of the few best of breed fundamental med tech companies out there. Is
Interesting.
Shockwave investors, because they got bought out, will they now transfer all their funds to Transmedics? And is that what we're seeing right now? And do they want to do it ahead of their
Mm.
next earnings report, which is in a month or two? Because they sandbagged the last quarterly earnings. It was like a monster print where like they grew the top line triple digits. They said we could have been profitable if we wanted, but we chose to acquire this aviation company because demand is through the roof. We didn't want to go through brokers anymore. We wanted to own the whole aviation company, so we didn't have to like have this backlog of demand that these brokers can't fulfill. So we're going to own the whole process. And because of that, they weren't profitable. However, that just gave them a huge moat of the network effect. Similar fashion at Mercado Libre has
Oh
this network
yeah.
effect in Latin America where like they're owning like they have the e-commerce presence, fintech presence, but they have the infrastructure presence where it's such a high barrier to entry for competition that nobody's going to really try
Yeah.
to go in their backyard. That's what Transmedics is doing to the aviation company. Huge inflection points. I think this is going to be worth $200 by end of next year. I'm modeling out a $300 price by end of 2026. So I think this is an absolute monster. I've been adding it like crazy the past couple of weeks, and I'm not even done yet. Like I want this to be a massive like top 5 position for me, and I'm just going to continue building it under $100. So
Interesting.
yeah, I mean,
So their
the chart
EPS
looks
next year, EPS next year, unbelievable.
no, it's an insane story. It's not covered. So they do a really bad job of PR, which sucks, but it's also why we can get a steal right now because I don't know, the company doesn't really communicate well. CEO doesn't really like participate in interviews, doesn't really do that PR hyping up that most CEOs do. But it is a
Yeah.
founder-led CEO, which I love. And fine, he's all about business. He doesn't care about all the noise of like publicizing it because the product speaks for itself. Why does he have to go out and like pitch it? So I
Right.
think it's a monster.
Interesting. Interesting. Let's this is very interesting. So let's take a look at that. Yeah, you've got some pretty big buying going on here. That's interesting. What was the reasoning? Was this like this is, I'm assuming it's earnings. What happened? They just,
No,
they're,
it's all the Ozempic noise. So remember, every med tech got destroyed because
right.
like everyone's gonna be skinny. The reason Transmedics went down is like nobody's gonna have failed organs because they're gonna be so healthy, which is the dumbest reason ever. So I doubled up my position during that time. I was like, "Are you fucking kidding me? Like, this is wild." And I think the reason it dipped like a week or two ago was because they had a successful like test of like putting pig organs in a human, and it worked. And
Oh,
like,
it's them? That's them?
no, it's someone else. That was like a completely separate thing.
Okay.
But
'Cause I just saw that story. A genetically spliced like liver or something that was from a pig went into this guy.
yeah, there's some FUD that like, oh shit, Transmedics will be obsolete in a couple years. No. However, last week, New York Times did a whole spotlight on Transmedics. So that's like, oh shit, that's a big one. That's a big time story in organ transplant. And like they're creating their own market. That's an amazing thing. Like because of this device, now they can go across the whole country for those organ transplants. Where before you can only go from like Boston to Texas. You couldn't go from Boston to LA. Now you can. So they're creating a brand new market, increasing their TAM while about to be profitable while growing the top line like 50 or 60% CAGR for the next 3 years. So it's like, I'm like, my brain's like, what the fuck? This is insane insane company.
Yeah, so that's interesting. So what about that device gives them that ability to increase, I guess, the distance and time of transport
It keeps it
while the
alive.
organ remains viable?
There's a lot of scientific stuff, but it keeps it alive like as long. It keeps it pumping and pumping, and actually works. And they don't just do like the liver; they do the heart, they do the lungs. It's not as big, but like they do have that access. And right now, to be honest, it's their biggest headwind is education, because if people knew like they can, doesn't matter like how far away that people can take their organs, I think a lot more people will be willing to give up their organs, knowing how many lives they can save like across the country.
Yeah,
Well,
I just did that today when I got my new license.
see, I mean, I just think it's education. And a lot of people don't know this name at all. Like they might have known it in 2020, 2021, but like ever since then, no, not really. It's all about Ozempic and AI. Like these kind of companies kind of go on the sidelines until they become mini monsters and go up like 100, 200% in a year. That's
That's
when it gets noticed.
That's really interesting. I think that so now that's where like I struggle. So like we work with some CEOs and try to help them get their messaging out there, because I think that is a place in which they all fall short. Because remember, like the economy and the market are disjointed almost all the time, and there is an amount of it's politics, man. It's pomp and circumstance, and if nobody believes in you, then they don't give a shit what your company's doing. And I mean, Elon, case in point, even when Tesla's numbers aren't what they should be, you don't see this. Well, at least right now you're seeing it, but previously you hadn't seen the same contraction that's going on macro across the entire market. Why? Because his fanboys come in with that buying at the right time and clean up that bottom, right? They've built like a vehement investor base of fanatics, if you will. And I think that any company that can achieve a version of that in minuscule amounts is going to be much better positioned. I mean, Meta has it, and that's why they're running far past valuation exceeds. It's stupid. Stupid
Yeah, I
when
mean,
we eclipsed 450. That was just dumb. But
mhm.
they got the story.
Yeah, no, you're absolutely right. I mean,
I'm gonna hit the CEO up. We're gonna see if we can get him on here. Have a chat.
you should. I mean, fuck. It's like such a mini monster. Maybe he just wants to acquire shares himself. He doesn't want like people knowing about it.
Yeah. Don't. Hey, no. Where this company sucks. Don't buy these shares. Are it's gonna probably go down a lot. I wouldn't even buy him while he's just hitting the pound on the table, just getting them in. No,
So
I like that. I mean, they this break, so trading over 80, I think, is a big deal for them, especially if they want to see it at a 3-digit price or more. I think just staying over 80 with significant buying, like the volume here is subtle. That's what's interesting. Is like it
it's
is too
consistent.
subtle
Yeah.
in a good way. So,
So
and just like it was right here. So back in May of 23, like somebody set buy orders bottom of range, which is good because like what I'm reading, if it was like what's the tape say, to me it says accumulation, large scale. Because one thing to understand, you guys, about hedge funds and institutions is like you'd think they're going to wait and buy the best price. They don't have that luxury because of the volume that they're trying to process. So they have to kind of make a decision. Hey, we like the base at 72. That's where we set our orders. So every time they get the market makers to push down there, they get their orders filled. I mean, that's like what you hear about stop loss hunting and all this other bullshit. It's real. I mean, this market is very manipulated. We can't pretend it's not, but it doesn't mean there isn't still opportunity for appreciation, which I think there is here. So I like this one. Very interesting.
I'm gonna give you another second monster chart with I think has some room to run. Shift 4, ticker FOUR. Similar fashion, we're
Mm-hmm.
sitting at their 200 day, like sitting at it multiple times, and it's probably one of the cheapest fintech stocks out there. Like it's dirt cheap. I think it's around 10 times EBITDA while having like really attractive top line growth. And the issue with this company, it's honestly this industry that they're in, it's just highly competitive, thin margins. It's just like none of them really have a moat because it's just they all have two similar products, like different partnerships, but it's like not enough to distinguish themselves from another. However,
Yeah.
Shift 4, I think it's for sure going to get bought out this year, in my opinion. There's been rumors the past month or two. The CEO has been rejecting multiple offers, saying it's not good enough. So I think it's which is justified because it's dirt cheap, like I just mentioned, like 10 times EBITDA for their top line growth and like their partnerships they have. Is like, all right, this is interesting. However, there was a recent comp that just got bought out 2 weeks ago. Ticker NVEI just got bought out at nearly twice the multiple that Shift Forward has right now.
Oh.
So that alone shows, all right, that comp is the floor of any kind of acquisition. So theoretically, this should be at least $100 or more for any kind of buyout. If not, the technicals are going to be backing up buying it right now just because it protected that 200-day like a champ. It just like not break it. And I do think it's just going to, if you like, where's the 200-day if you want to put it up there?
Yeah, we can. I'll just shut this off. So, yeah, we're right there.
Protected like a champ, did not break it. And so it's a combination of the fundamentals is cheap, chart clearly protecting a huge pivotal like technical for them. And
Yeah.
there's a high floor in the stock because a comp just got acquired at nearly twice the valuation as it has right now. So I'm like, all right, this is like one of those of 80% chance of profitability, 20% chance of losing money. The worst case opportunity costs where it doesn't go anywhere until all this like noise goes away. Who knows? I just know I'm trading it. I have some options in play for June. I have some options to play September for that buyout. Or who knows? Maybe they start catching up to their respected valuation, like their comp just did, NVEI, who just got acquired. Like maybe it starts itching closer to there. Regardless, I bought $75 calls. I think this is going to be closer to $100 in the next like 1 or 2 quarters. And I think it's an interesting trade. So in both these companies, Shift4 and Transmedics, they're worth under $5 billion. And I know like that's still a lot of money, but like those are the kind of the runners. Like when you see companies worth like small on the smaller side, like a couple $1 billion, where the fundamentals are pretty attractive and like those are how you find those like just huge runners. So I think this is an interesting play. I started getting into it this week. And yeah, I mean, it's also just founder-led CEO. So I think that's why he's like, I'm not taking anything less than I'm known what the value is. So
yeah, and this is interesting. So like my main strategy that's maybe the most money is front loading earnings, right? So we look at first quarter 24, obviously earnings expectations aren't great. Q2 and 3 exceptional, right? Huge beat, great numbers, awesome. We missed Q4 23 is what it is. But you could see here's our anticipatory growth, right? So they're never missing by a large margin. It's minuscule. But when they beat, I would argue that it's about they're beating earnings by about double what they're missing, right? Maybe even a little more. So basically that tells us 2 things. One, that expectations and a beat, that's a big number. Expectations and then miss, it isn't that much in terms of contrition. It's just not much. You don't have to really give much. The price isn't going to get to see some sort of snapback, especially trading that 200 days. So like what I like to do is like I would start concocting the options trade for Q4 of 24, but now, because again, as we've talked about on this stream million times, the run up on earnings isn't happening here. It's happening here and here and a little bit here. The play happens long before the earnings are reflected and the data comes out. And like we did the same thing with NVIDIA, right? So I was buying NVIDIA 150, 148, 152, 165, 175, just loading the boat, loading up those 250 calls in anticipation of two earnings ahead, right? So 4 quarters ahead. No, 2 earnings. So yeah, 2 quarters ahead. Sorry. So the idea was I want to see 300. Now, here's the best part of what I love about the strategy. I was not expecting the beat that they came to play with. So again, money was already made. The trade was already complete by the time that earnings was announced and my profit was in the bag. This strategy works because it puts you in position to massively capitalize on anything exceptional while also giving the opportunity to hedge and lock that profit in on the ride up before the news even comes out. So basically what I did was I had like maybe 10 grand in the trade. I yanked half of it out. So I made my money. I'm covered my position that I'm holding. In worst case scenario, I give up 50% of my profit on the small position I had left. Wrong. Those calls ended up going about 2,400% total. So they boomed, right? And I think if these earnings numbers come back as anticipated, and we see a nice run into basically Q3 of 24, I'm saying all that to say that I agree with you, and I think we're gonna have to start. Like I'm gonna have to get a taste of this. I got to get a taste right now. I'm gonna tell you right now. I got to start. I got to get a taste of this because I always like to explain to people that options trade on the bell curve, right? So we want our strike to be hit right here, and this is time. This is our time axis. This is our so time is our x, y is our strike. We want to be taking profit as the strike runs. With it, this is our halfway point. So if I'm looking for my trade, my strike to hit in a month, I need to have at least 3 months on expiration, right?
Mm-hmm.
So for this one, if we're expecting those earnings to read out like that, let's see. So we're going to trade for Q3 of 24. Interesting. So let's go back to the chart and let's figure out where we've got that time. So that's Q2. And then Q3 will be May, June, July, August. So that's our trade. So we'd shoot for, say, September, October. I like that you mentioned September already. We'd shoot September, October with the anticipation that we would hit by June. So I like this. I like where this is. I like where this is going here. This is good.
And the reason we can make these ballsy plays is, have you talked to the SPY chart yet, or S&P?
No, we can do it. We can do it though.
Let's do it. So SPY, I don't know if you made any commentary what the fuck happened yesterday. Absolute shit show. What happened in the markets in like the last second half of yesterday? All of a sudden, it just turned red real quick with velocity, and it broke the. If you guys haven't been tracking the SPY, like ever since we rallied in October, 6 straight months of straight up to the right, they protect their 21-day EMA like an absolute champ. Like every time it touched it, it bounced. So if you wanted to keep things simple and like, there's so much noise in the market, like I don't know what to focus on this one metric because you have made bank the past 6 months. And I think you can make bank using just that one metric to like, all right, is the trend going to continue in the market the past 6 months, or are we near a top? So yesterday, huge volume, all of a sudden red, and you can kind of sense the fear, like what happened. And it also broke their 21-day EMA with volume. So that alone scared a ton of people, myself included. That combination, along with defense stocks rising midday, intraday yesterday.
Yeah.
The Israel ETF, I forgot the EIS or something, like was dipping hard. While all this was happening, all right, this dip is geopolitical. It might be news driven, which is usually the opportunity. However, defense stocks going up while that ETF going down, with like SPY breaking that 21-day EMA, which you can see right now, like how perfect is it?
Yeah.
Every time it touches. So that was like, oh shit. So something's going to go down. Like there's going to be technical traders are going to sell, take profit because trend got broken. People are the VIX is spiking, and now this chart looks really bullish on the VIX. And all these factors of like defense stocks rising, like they're like, okay, something's going to happen with Iran and Israel potentially over the weekend. I want my money out. So there's a lot of fear yesterday. I was one of those people. I was like, oh my God, this is trend breaking. This is new character in the market that hasn't been introduced the past 6 months. So today couldn't have been better for what happened in the market. Like we needed a good day today and not a follow through from yesterday. Because if we had a follow through from yesterday, that's a completely new character in the market. And people don't like new character traits in a market where they're consistently going up to the right past 6 months. Anything different or any additional noise, they're usually, I'm going to wait on the sidelines until I get some more clarity. So today, is it over the 21-day EMA? Did you?
No, below. And what I like to see is like, okay, so we had like really solid trend strength from October. That's what I was tracking. And yesterday was that first violation. Look at that.
Yeah.
Bing, 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 just riding it up. You could see it by the curl. Like, guys, a lot of this doesn't have to be that complicated. I feel like a lot of times people see, when I see these sharp edges, I know upside's coming. When I start to see it round off, that's when I start to get nervous. And you could see that it's rounding off. So whether it's trading significantly above it or not, I don't care. Once I start to see the price action rounding off, I know we're getting kind of to the end of the road.
Which is, This is This is classic market mechanics, but you have to take note of it because you guys know market ebbs and flows. It's just been going up to the right the past 6 months. That's
Yeah.
not normal behavior. This could be the profit taking, seasonal weakness. There's so much geopolitical noise. Not the worst thing to, like, I don't know, take some money off the market, like from your gains and put them on the sidelines. Who knows? Or play the opposite way. There's a lot of ways you can play the downside.
Yep.
Having said that, I am not as comfortable being in the market as I was last week.
Yep.
And because of that, I'm just being very selective on what I'm owning. And you guys should be too, because it's very easy. Like, we've had an insane year so far in 2024. Very easy to lose those gains within weeks because the downside happens twice as quick as the upside. And
Right.
the downside is always much more severe. And because of that, people get scared out of their positions before it bounces again, and you just end up losing money.
Yep.
So I like to be the first one on any kind of move. And because of that, I bought some hedges for my portfolio that's expiring in June and September. If you look at the weekly charts for the SMH and SPY, like, they're clearly overbought. Their RSI is 75 plus. Usually anything above 70, I'm not touching. It's 75 plus. So that combination of the short-term trend turning and the long-term weekly charts, like, overbought, not a good combo. And this week was like one of the first weeks in a while where gold was going up and the bonds were going up. That's a no bueno. That's like a red flag, red flag, red flag. Something's going down. Something's being priced in of that's we're not being heard of yet in the news. That's a red flag for investors. So there's just so much. Like, I know I'm in perma bull. Like, I'm just like, I think we're in the beginning of this bull market, not the end of this bull market. However, you have to be a realist. Like, you have to be on the ground and know what the reality is, because this game is meant for the weak players to lose. Don't be that weak player. Know this, what's actually happening, and don't be delusional in this fantasy world of like we're bullish near all-time highs. Like, no, it's short term. You might have a pullback. And what's the average VWAP from the October rally in SPY? Like, it's probably, I don't know, I wouldn't be surprised if it was like at 470 or 480. So there's a lot of room for it to dip. And yeah, if you look at the VWAP, which is my favorite metric to use. I think the VWAP from the October low is the best metric to use for like the average volume, average price that a lot of investors have bought this specific equity. So I don't know what's the VWAP from the October low. Oh shit, Austin, you're on mute.
I don't know how to set it from October. I don't know if you know how to do the time calculation like that, but it looks like 518 right now on the weekly.
Here, let me do. I can pull it up for everyone.
Yeah, pop it in there. You want to share your screen? You said present.
Here, let me see. Yeah, let me present real quick. Where shit, I have so many tabs. My bad. Present. Oh, it only lets me present slides. Oh no, share screen, found it. All right. All right, let me know when you can see it, Oz.
There you go. Bam.
Perfect. All right, so make this a little clearer for you guys. All right, so right here, let's get rid of the. Actually, no, let's keep the 50-day. All right, so the VWAP right here is the blue line. You can see it's hitting 480. Damn, dude, I nailed it. I knew it was going to be 470 or 480. So, like we mentioned earlier, we're at the 21-day EMA, like roughly around there. You've seen a bounce every single time since this October rally. Like we started bottoming here, follow this purple line. Follow this purple line every single time. It just bounced perfectly. That's a clear trend in this market. So because of that, this is a big pivotal moment. Do you see this candle? This is a disgusting daily red candle. It's a red rocket that you don't want to see. So then right here, it's hovering around here. And like, yeah, we went above it, which I'm happy for, but next week's going to be a huge week. So if we break this, we're going to test the 50-day naturally, which is at 507. Not a big deal. It's a 3% correction. So end of the day, like if we do dip, it might be 3%, hit this 507 or 506 range, theoretically bounce, and then we go over the 21-day EMA, business as usual, we go up. However, if we break this, the VWAP is 480. This alone, this is 3%, but this right here is a much bit different story. You can see the 518 of 480. That's like a 40, that's an 8% correction. That's a big deal, especially in an election year. So I don't think that will happen because there's trillions of dollars on the sideline. But if it does, like geopolitical risk gets even worse, and there's no catalyst that is to the upside. Like I could see us testing 480, and then I do think we bounce here. You clearly see this volume shelf at 475. It's a massive volume shelf. So there's been a ton of accumulation in the past like 6 months around this range. So I really don't see us testing like the 460 range. I see us bouncing around this VWAP, if not huge support area in 470s. But at the end of the day, like that's what I'm talking about. Like yesterday was a massive like breakdown, and today was bullish, but we didn't finish at the highs. What did we finish at today? We finished. It was a little choppy in the afternoon session, so it's not exactly what you want to see, but we did protect the 21-day EMA. But next week's gonna be absolutely vital, and because of that, I'm just like I'm watching. I'm big time. Oh, Austin, did you leave? Oh, you're on mute again.
All right, no, I just popped my thing off because you're going. That way it'd be focused. And I was eating some chips. So I would be eating on screen. I just had to smash them real quick.
All right. I can show my model if you guys want to see some comps too.
Well, I think first, because we're about to wrap up. What are first? So final thoughts, right? I think you're spot on. I mean, to me, if 470 is a no zone, I just don't see a world in which, like you can see that's where price really escalates. Like we're up from here. So we see that again. That's gonna be an incredible buying opportunity. Conspiracy question for you. Say the Don makes a return and wins. Is there enough Democrat power to dump the market as a result of him winning? He's like, cause the way I see politicians is this: they're children that throw tantrums at any cost. They don't care. It's not going to affect them. It just affects us, and they don't give a shit about us. None of them do. They don't care about your party. We're the cattle. Do you foresee something like that? Because I mean, that's what in my mind makes this crazy to even think that the market would see any downside.
I don't think the Dems have the balls for that. If it was Cicheru, I for sure think that they would the other side. But I just think, do they dump the market? I do think whoever takes office will have a very, very brutal midterm. I think 2026 would be a really tough year for a lot of different factors into the market. I do think consumers are going to really struggle for the next couple of years. It's not going to get easier. And I do think that inflection point will be in 2 years. So I think whoever wins is going to have a really brutal midterm. I do think – so I was asked this question yesterday, actually, like what's more bullish for Tesla, if Trump wins or if Biden wins? So if Biden wins, obviously he pushes EV, all the credits, like he's big on the EV industry. Don isn't. He thinks it's Fugazi, it's whatever. But Elon might finally reel back on his like toxic behavior online if Trump wins. So I do think it's more bullish. I think Tesla's in a win-win scenario, in my opinion. But going off of like the market, I do think it's obviously more bullish for the. I don't think the Dems have the balls or the to like tank the market or do some like whatever like dance on the socials or the media to like put fear in the market. I don't think they have that capability. I do think it's gonna be more bullish if Don wins for the market, but it's gonna be a really, really turbulent Q3. I wouldn't be surprised if we see mass selling in September. If you guys remember, like when Don won like 8 years ago, there was a ton of selling, like a shit ton of selling. Or actually, no, maybe it was last cycle. There's a ton of selling always into these kind of elections where like nobody knows who's going to win because of that uncertainty, they're just going to wait. So I do think, and also like, the most seasonal part of the year of weakness is that September time. Like nobody,
Right.
like September's usually awful. And because of that, with all these different noises, and I don't think geopolitical like things will improve at all. And I do think if Don gets some more momentum, like he's a favorite. Like I think he is the favorite right now, but he becomes more of the clear favorite as we get closer. The reignition of China trade wars, that might be a huge narrative in Q3. And if that happens, tech won't be rallying. There's gonna be some additional headwinds that you have to factor into. Like if Don does win, like we do have to factor in a potential trade war with China. And what if like they're put to a corner and they do something in Taiwan, or like there's gonna be tariffs or whatnot? It's not bullish for tech. That might get played. That might start getting factored in. That's not being factored in right now. No election noise is being factored into for any kind of turbulence in the market. That's impossible to keep for the whole year. So watch out for when that's going to happen. In the meantime, short-term trend, I think it's borderline bearish, but it's not bearish yet. Watch out for that key level next week. Huge level next week. But earnings is just around the corner. That could be a major catalyst. It was a major catalyst last quarter, and we clearly bounced. Everyone exceeded expectations, and it was a really strong earnings for the S&P and tech.
Yep.
So that might be the catalyst we need to reignite this trend. But in the meantime, I see the market really not going anywhere. But if I had to pick a side, it's probably going to be down and break the 21-day and retest that 50-day.
Yeah, I would agree. So I guess one more question then. How, because look, the one saving, and just to be very clear, I don't give a shit about politics. It's all bullshit. I don't take a side either way. Don't care at all. So whatever your beliefs are, whatever, everyone. But one of the elements that I've heard noted as far as Donald Trump's presidency was this. The man, supposedly, from what I've gathered, did a very good job with foreign policy. He always wants to broker the deal. So should we see him in office and China comes to the table, right? What can we expect to see reflected in the market on something like that?
I mean, Bob would go crazy, for one.
That's why I have it up.
Oh, you do?
I already have it up. Yeah.
Bob would go crazy. I do think there's a lot of geopolitical risk in China stocks. Like Temu is going crazy. Not Temu. PDD is going crazy because Temu is just like spending money like doesn't care on Meta's platform and just like advertising. But like Baba has a ton of room to run. JD has a room to run. I wouldn't touch anything else. I mean,
yeah, JD is interesting. So PDD was one. I was a buyer at 60 in both options. I was like 1,000% winner in options. JD is to me the most attractive right now as far as value standpoint, because you do have pretty fucking significant buying coming in over the last couple of weeks, which tells you. And then if you're a fundamentals guy, you could just like, it's clear as day, guys. You don't need to draw 800 lines on your chart to see something that matters.
So I'm gonna pitch a narrative to you. Let's say they broker the trade or whatever China.
Mm-hmm.
TikTok will eventually go public because of that.
Mm.
Will that hurt Meta in the next couple of years, where now TikTok can like have free reign and like doesn't have to deal with the headwinds of like the current administration, and like we don't want China like involved in you, and like you can't go public in the U.S. market. If that goes away and they actually go public, Meta might be hurt.
Oh, Instagram's done.
Yeah.
But the real question is, how does that reflect on Google?
Oh my God.
And how much short form traction is there for, I don't know.
I think that's I forgot to mention this part. I do think Google like acquiring HubSpot is their Trojan horse to get into the enterprise space.
Yeah.
Microsoft owns that space.
Yeah.
This is Google's like Trojan horse of getting in. So maybe they're trying to diversify their product suite of like Microsoft's killing it on enterprises, and Microsoft Outlook has not evolved at all in the past 5 to 10 years. Let's create a competitor against Outlook. And
I'm a Google Workspace guy. All my companies use Google Workspace.
So maybe like they just pivot from like the search, like primary search and ads, to start focusing on enterprises and be a more full suite. And it won't be as much of an impact on the search revenue. But even like I read somewhere like TikTok or ChatGPT, like it diminished a couple percentages from their lead, which went from like 96% to like 92, if that. So I still think they have a huge throat hold on like that search space, but I do think their focus is on more AI enterprise. So that's going to be more, if you're a bull on Google, those are the two things you need to focus on. Like what they're going to do in the enterprise space post HubSpot acquisition. Gemini, is this partnership with Apple anything to like, make of it? Or is this two of the worst big tech AI players out there just merging together? Like we're both sucking at this, is merged together. Two negatives make it, like we'll see where we go together. Who knows? But that's what they're focused on. And that's what investors should focus on as well, not as much the search or TikTok.
Yeah, and I don't think it's different. It's a different variation. Like, will Google you lose search traffic? Like, yes, but it's not the same kind of search. Like, it's not the same thing. It's just not. And Duco, you say TikTok's the devil. Here's my philosophy on that. Whatever TikTok has done, their algorithm is the most intuitive and advanced I've personally ever seen. And whatever their capability is to read mass amount of data, because like understand, in order for them to serve you appropriate content, they're not just going off of like tags and keywords. Like they're able to comb the entire video, pull file of text, register that text, and then render a result based on that text, based on your user readout of what you're interested in, right? So like there's a database element of TikTok that like I don't think it's even a thing yet. But I'm just trying to think like raw source material. It's like you look back in the day when gold was the ticket, right? Where can gold be? It didn't really matter. Do we have the ability to mine it? How do we get there? Who cares? No, it's just the land. It's the resource itself. And I think TikTok's raw resource is interesting. And then I'll say this. You say it's evil. My TikTok feed is it has been an extremely positive element in my life ever since I think TikTok is a mirror. That's all.
100%. So
that's all it is.
If you think it's evil, stop watching those evil videos. Just watch the positive videos and you'll get the positive videos.
It gives you only what you desire. Yeah. And that's it, and that's all.
I've heard stories of like boyfriends getting in trouble from their girlfriends because like you have a bunch of like naked girls like on your TikTok feed. And they know like it's mirrored off of like what
Stop looking at ass.
Exactly.
I have zero ass on mine. I used to keep like a 5% ass. Like, you know what I mean? 5%. Like, let's be reasonable here. You see, like, it's like good ass. Okay. And then you move on. But I realized as I changed, and this isn't even about search or anything, like as I changed, I noticed that it's very interesting how it has mimicked my shift in frame of mind in a way that's like, this is beyond just like, what can the tech do? But it's kind of weird, man. It's spooky is what it is. So that tells me that they are either doing something incredibly nefarious, which always on the table, but no different than what Mark's been doing, right? Zuck's listening to every conversation. Buddy of mine, we tested this 2 years ago. We tried to figure out what's one thing we've never talked about in text, like that we just wouldn't mention, right? We determined that keyword was crockpot. I don't think I've ever talked about a crockpot to anyone in my life. So we just started talking crockpots like here and there. Sure as shit. Because I just wanted to know, like, how are they? Is it through text? Are they actually listening and rendering the data from real-time audio? Is it phone calls only? Because I didn't really know. Dude, phone was not off, but phone was like disengaged, right? It's like lock screen. Only talked about it with the lock screen on. So it's always running.
Fuck.
And TikToks might be even more interesting than that. I think that they found a way, and this is total speculation. There's absolutely no foundation to this. Full disclosure, full disclaimer. But I think their networking capability between devices is just light years beyond what anyone else has been able to do. I think that they've found a way to truly understand, like, say we're in the same room. What does my device and your device mean if they're together? What does that mean about us as people, right? And then it could, in theory, start searching for commonalities. What are the common threads between us based on the data that everyone has? Your search history, my search history, your conversations, my conversations, and then render a result, right? And then it's like a compounding effect of like, as it learns, right? And you look at what these AI models do, they just extrapolate to make guesses. Mm-hmm. You make enough guesses, right? And if you have that mechanism by which you can swipe, scroll, like, share, they know what I want because I'm telling them. But if they can take what you want and what I want, and then the common threads between us, and then I guess make assertions as a result, they know us better than we know ourselves. Terrifying, isn't it?
I mean, dude, like once your kids become an old enough age, they might just take your phone and start talking about what gifts they want. So you'll see it on your own feed and you'll buy it for them.
That's hysterical. I would give them credit for that, dude. You use it the right way. I tell my kid every day, like, don't be Google's bitch. Just stop, dude. They're making money off you. Where's your paycheck? You're just wasting time. But I don't know. That's interesting. A lot to talk about. I'm glad you jumped on. Just to let you guys know, something to look forward to. We're going to start doing more of these, so you can get a broader perspective, a better understanding overall. But
well, dude, it's gonna be amazing during earnings season, which is starting next week.
I'm very excited. I know.
We're gonna be talking earnings.
Let's get it, baby. All right, I'll see you later, brother.
All right.
See you guys.